All right. I think we've got a number of people in now, so we'll go and get started. I know Matt has a lot to cover with his presentation. Just want to thank everybody for joining us for our webinar series with the labor economists and labor market information. My name is Craig Shull, and I'm the research supervisor for the labor economists here at the Department of Labor. And like to say, this is our Ides of March, St. Patrick's Day edition of the webinar. I ran out of time to make a nice little quip about that, play on words for those occasions, but I'm glad to have you here either way. So Matt's our economist in Idaho's southeastern region, and he's going to be going over a recent analysis he's done of Idaho's trends in private housing development. So then after Matt's presentation, we'll have a period of questions that you can question and answer for Matt. Just click that Q&A button at the bottom of your Zoom interface there and plug your questions in there, and then we'll impart those to Matt at the end and see what we can quiz him on and see how much he knows here. So with that, I'll do just a quick introduction for Matt. We'll turn it over to him. So Matt comes to us from Indiana. He's a native of the state. He's been the labor economist working at the department's Pocatello office since December 2021. And he has a master's in economics from the University of Illinois at Urbana-Champaign. I just feel like I need to say that with more French verb, but anyway. All right, Matt, thank you for doing this webinar today, and it's all yours.
Thanks, Craig. So I thank everyone for attending today. Hopefully all of you in the rest of the state are finally starting to see spring poke its way through this very long winter we've had, especially here in the southeast and eastern half of the state. And with that, this is also sort of a nice timing for this presentation, because this is often sort of the beginning of the ramp up of construction season. But we'll be asking a somewhat different set of questions. We're looking at a different set of things today that are related very closely, and that's going to be housing permits, which are somewhat of a leading indicator for housing construction. Today's presentation, I called this little sort of brief analysis piece I did on the blog, Not All Housing is Made the Same, Composition of Private New Housing Permits Authorized in Idaho. This is now out on the Idaho Department of Labor blog. And I'm just going to do a sort of a quick summation of it with some additional information I gathered, which sort of I find very fitting for the topic. So I'd like to begin with a thought experiment. So for each of you, imagine you are a housing developer. In your area, you're seeing prices and rents rising, and you guess that, oh, it'd probably be profitable to build new housing since there seems to be strong demand for it. The question I have for you is, what type of housing will you build, and what factors might be influencing that decision? So looking at what you might build, obviously we have the sort of the classic dichotomy of single family homes versus multifamily structures. And even amongst multifamily structures, we have a whole range of options from duplexes, tripleplexes, fourplexes, all the way up to perhaps a several unit structure like an apartment complex or a condominium. You might have questions about space. Do you want stuff that's perhaps a bit more compact, sort of the trend we've seen in amongst at least some households is this move towards smaller living arrangements. Perhaps it's more for budgeting purposes, perhaps it's more for environmental purposes, or perhaps even that many households these days are much smaller than they were in generations past, so they just don't need as much space. So that's another thing you might consider. Amenities. So any housing unit can include a whole host of certain amenities which might make it attractive to households. Obviously things like washer and dryer, dishwasher, but also other things like if it's a single family home, an attached garage structure, and that could be 1 car, 2 car, or more than that. Even if you live in an apartment complex, that could be perhaps covered parking spaces for tenants, or perhaps on-site sort of shared amenities like a gym space, a pool, and so on. So again, more things you might consider. And finally, as realtors often say, it's all about location, location, location. So where specifically would you build in your area, and what around that might influence that? So then moving on to the factors. Now, obviously, people always prefer, at least not always, but more times than not, prefer more compared to less of sort of amenities and other types of things which make a house more attractive. But despite those preferences for more as opposed to less, they do have certain constraints they're under, mainly their incomes and what's in their budget. What can they afford? And specifically, the households in your area who would be prospectively either purchasing these properties or renting them, what specifically would they be able to afford? Next, we have costs, and most especially cost of land is a big one for housing, but also the raw materials that are going into those structures, the cost of labor to build those structures, certain regulatory costs, which are perhaps more of an implicit than an explicit cost. But again, you're going to have to factor those into, and that's going to sort of affect the calculus of your decision making. Then moving on to the regulations. Obviously, every municipality sort of decides on their own what mix of building codes, zoning laws, the input of elected officials, or perhaps even the general public into what gets approved or not, or perhaps have some say in the nature of what gets built. So you're gonna have to navigate that environment in your area. And again, that's perhaps more of a very local type of set of circumstances you're gonna have to learn if you aren't familiar with it already. And finally, sort of taxes, subsidies, and other types of public policy considerations on that side are going to factor in. It should come as no surprise to most folks that mortgages do get a bit of a preferential tax treatment with the deductibility of interest paid on your mortgage. In many areas, renters do not have a similar type of benefit. So that's going to, again, perhaps skew demand more in one direction versus another. And you as developer, if you're aware of that, it's probably going to influence what you build to match that demand. Now, why this might matter. So if anyone has been watching the news the last couple years at least, you know that housing prices in Idaho have been growing at what seems like a very unsustainable rate. This has been due to sort of a long backlog of housing starts, which had sort of been rushing to catch back up with demand growth, with the population growth we've been seeing. And it's sort of been like a constant struggle of developers that they perhaps want to build more housing, but it just supplies not quite keeping up with demand. So we're seeing rising prices across the state, although with the interest rates rising last year, we have seen some cooling in many markets. So that's just more of the general picture of just general demand, general supply for housing. But we start to dig more into it. This question isn't just sort of just an abstract problem. This is sort of having effects on the general economy and general households' perceptions of, I guess, their current financial circumstances. So we have existing Idahoans who are perhaps being priced out of the market. I hear about stories of many older Idahoans or those living on fixed incomes who are just finding it increasingly costly to stay where they're at. Perhaps they bought this home a decade or two ago, and they thought that this would be sort of where they'd finish out their golden years in retirement. But with rising property values come rising taxes on those properties, and with other costs of living going up, it's making them have to reconsider whether or not this is going to be their sort of where they're going to finish out their golden years, or if they're going to have to relocate. So that's a very, very troubling decision, perhaps for some. We also have many younger Idahoans who are getting to that stage in their life that they'd like to go form their own households. Perhaps they're still living with mom and dad, or they're having to take on additional roommates when they'd prefer to have their own place. And they're looking at the market and they're just saying that, well, now's just not a good time, and having to defer that decision longer and longer, or perhaps even reconsider if they're going to be staying in Idaho as a result. And lastly, we have potential entrants, people who might want to live here, to work here, who are looking at the housing market and saying, oh, this is just a more expensive proposition than perhaps I was anticipating, and now I'm having to reevaluate that. I've heard several employers have told me of sort of their own anecdotal stories of they'd find a really great quality candidate for a job, they extend an offer, candidate initially accepts, but after a very long and painful housing search, they've had to turn it down because they just can't find anything in their area within their budget or with the right mix of different amenities that they want. And so they turned down the job offer, unfortunately. So there's, again, some potential people that we're not seeing who are being affected by this. Now, if we start to look at the composition and how that relates to the general, again, supply-demand story that I think most folks can kind of intuitively understand, is that new housing starts may or may not be aligned with what households would like or can afford. And what is being built is responding to policy in many ways. As I mentioned, we have certain regulations, we have certain tax codes, which might bias the composition of new construction in one direction versus another. And that's going to, in some way, either better match or perhaps less match the demand for new housing in different areas across the state. And this becomes an issue from an economic welfare perspective, because there's sort of a general understanding that in the urban economics literature that land use regulations and similarly housing code regulations may or may not be welfare improving to the extent that they mitigate things like congestion, pollution, other types of negative externalities. As we say, they tend to be net welfare improving, but if they tend to be more restrictive in just preventing more housing from being built, or the types of housing that's being built is just catering to perhaps a very narrow part of the market, it's going to lead to perhaps a rise in prices in general from a lack of supply that tends to be more costly than it is beneficial. So nationally, much evidence seems to point to them being net more costly than beneficial. And this paper by a professor of mine at the University of Illinois, David Alboe, and one of his colleagues had looked at sort of a national cross-sectional analysis of this topic. But there's been other papers on the subject which similarly would argue that on the whole, nationally, they tend to be more costly than beneficial. Not saying that's what we're seeing in Idaho, but again, keep that in mind that there's always an opportunity cost involved with these decisions, and there's always something that you have to consider that perhaps you're not seeing as to something like a density requirement or open space requirement or an exaction or different sort of regulatory hurdles you have to put a developer through. So I want to point this graph out because it helps to put things in perspective a bit. This is the Federal Housing Finance Agency's All Transactions Housing Price Index. This is a repeat sales price index that follows a similar, though not exactly the same methodology as the Case-Shiller index that perhaps is more widely read nationally. But in any case, this index is set with first quarter of 2017 as sort of its reference year, and then sort of traces the state and 5 of our 6 MSAs over the next 6 years. We have roughly 3 years of the pre-pandemic period and about 3 years of now the pandemic and post-pandemic years as well. And what we see is that, broadly speaking, we had seen a ramp up in prices following sort of a lot of common trends, Lewiston being perhaps a bit of an outlier there that was growing at a slower rate. But starting in latter half of 2020, then through 21 and into at least the first half of 22, we saw a noticeable acceleration of housing prices. Now, again, some of this is that general supply and demand story, but the point I'd like to sort of pose on top of that as well is that some of this might be due to mismatching in the housing market between what households would like to have and what's actually being built to prospectively meet that demand. And to sort of frame some of the discussion that's going to quickly follow here in a sec, like to sort of put on my microeconomist hat and say that we tend to want to think of individual choices as a function of first preferences over possible outcomes. Again, households might prefer some things versus more than others. Developers might have certain trade-offs they might face in terms of what they can build given certain cost constraints. But over those preferences, they have constraints which ultimately pin down what it is they decide. So in the case of households, again, they prefer things like privacy, they prefer things like space, they prefer things like amenities and location, but their budget constraints going to determine what they actually choose. Similarly for developers, typically think of them having primarily a profit motivation, but again, individual business leaders might have their own intrinsic motivations. Perhaps you might have an idea of what exactly is the ideal home for your community, and it's going to motivate what you might build, but ultimately you're also going to worry about that bottom line at the same time. And likewise, you face constraints like input costs, tax environment, regulatory environment, which is going to sort of pin down what you actually build based upon what's feasible. So onto the data itself. This was pulled from the US Census Bureau's Building Permit Survey. This is a monthly survey that they put out of different permit authorizing government units across the country. Permits themselves are not a perfect one-to-one mapping from what gets permitted to what actually gets constructed. Obviously, some permits might get issued and the project just falls apart due to certain technical problems they face. I know I've had at least one story reading of a developer in at least the Southeast who had big plans for a project. They initially got permitted, but with the tight labor market we've been facing, it's just been too costly for them to hire workers. And so they've had to shelve most of the development project. So again, it's a bit of a noisy indicator, and it's, again, a leading indicator, but it tends to be pretty strongly correlated to the extent that most permits that are issued will follow through as permitted to build the project. As for what we're specifically looking at in these permits, so there's a lot of geographic variation of just how many are being issued in any area at any time. So that's one important source of variation we're looking at. We're also looking at exactly what's being built in terms of, are these a single unit structure or a multi-unit structure? And amongst the multi-unit structures, is it a 2-plex, a 3-plex, a 4-plex, or perhaps 5 or more units per structure? And we're looking at valuation. And importantly, this is valuation excluding the land underneath it. So this is just on the structure, or we might say the improvement itself, and not the land at all. So first graph I got pulled up here is the issued permits for Idaho for 2004 to at least 2021 was the last full year we had when I wrote the report. I think 2022's just came out recently. Typically there's a month or two lag, month by month, of when a month comes out, and then the annual benchmarked estimates come out sometime in the spring of the subsequent year. But in any case, what we can see is sort of classic story of the housing boom and bust of the first decade of the century. So those who were found and can remember the early and mid-aughts, there was this period of just constant, you hear anecdotal stories or read in the press of people saying, oh, their homes serving as a primary means of investment as opposed to a durable consumption good. You have perhaps more people buying homes who thought that in previous years or decades could not afford to due to a changing financial regulatory environment, which made lending much more easy to a lot of sort of non-typical households who would be purchasing homes. And that sort of fed sort of, one would say, an irrational exuberance in the housing market, to quote Robert Shiller, the economist who wrote on this subject at the time. And with that sort of high, or at least fast price growth, you had developers responding as a result. They were looking at the market and saying, oh, obviously people are spending more on housing, they can likely afford to. And so that signals to the developers that demand's strong, and so they ramp up production as a result. And so we saw that for that first decade or so until the peak there in 2005, at least in Idaho. I think nationally the permits peaked in 2006, but again, we were largely following national trends there, that things were going good until they weren't. And suddenly, with the popping of that housing bubble, once a lot of homeowners realized that they were way underwater on their homes, and a lot of lenders realized that they were likely going to take major losses on their mortgage lending or mortgage-backed securities end of business, we saw prices fall precipitously, and as a result, new development of housing fell precipitously. Because again, developers are taking price signals seriously in their decisions, and when prices begin falling, developers take that as a sign that demand's falling as well. And so we had several years of fall and then a very slow protracted recovery. And it wasn't until 2021 that we were starting to see the level of permits issued returning to the peak of that last boom cycle. Now, again, I think that story should be intuitive to most folks who were around and can remember those years. What's more interesting, I felt, was the composition. So it's kind of hard to see in this graph due to just how long those blue bars are, blue bars being the number of one unit or single family structures being permitted. So I create these little pie graphs to sort of help illustrate that a bit more easily, and I broke the data down into just 2 decades. So we had sort of the boom in the very beginning of the bust years from 2000 to 2009, and then the sort of slow agonizing recovery, and then slow transition into sort of a more robust housing market at the end of the last decade, ending there in 2019. And so what we see is in the first, well, actually across both decades, we can see that lion's share of new permits issued are going to single family homes or just these 1-unit structures. But from the first decade to the second, we see a bit of a decline from about 85% to 77%. Amongst that sliver of the multifamily structures, almost half of them were for the 5 or more unit structures. So again, sort of think of like a large condominium complex or an apartment complex. But then by the second decade, even larger share going to, again, these highest density developments, and a decreasing share of duplexes and 3 and 4 plexes. So it seems that there's sort of a broad trend towards, well, still the single family home is the dominant form of new construction taking place in the state, but it's sort of waning slowly. And amongst the multifamily structures, it's mostly going to the highest density developments, and that's growing in share over the last 2 decades. And if you're curious about how we stack up against the country, these red numbers now sort of just report the national corresponding figures for each. So nation in that first decade was a bit skewed less towards single family homes than Idaho. And that partly could be explained by the fact that we're a rural state. We are a fairly low density population state. And with the sort of the relative abundance of land, it would be relatively cheaper and probably influence largely sort of that sort of greater bias towards single family homes that we saw in the state of Idaho compared to the nation overall. But otherwise, we see that nationally, there's a similar trend from that first decade to the second, that declining share of single family homes being permitted and growing share of the highest density structures, growing from 21% to 34%. So again, so we're kind of in large way following national trends, but perhaps at a lag due to sort of our unique starting point with our housing development. Looking at this a bit now at the MSA level, do want to note that until 2003, only Boise City and Pocatello were classified by the U.S. Office of Budget Management, who designates these metropolitan statistical areas on a rotating basis. Those are only recognized in Idaho, and then starting in 2023, they included Coeur d'Alene, Idaho Falls, and Lewiston, and then much more recently, they included Twin Falls, but due to the sort of the lack of data for Twin Falls until 2020, I did not include these, did not include Twin Falls in these graphs. I'll get to that here in just a sec, but we can at least see that while the predominance of the single family starts is sort of ubiquitous across our metro areas, there is still some degree of metro level variation. And again, think of local circumstances, local constraints on developers, which might tilt new developments in one direction versus another. So we had, starting in that first decade, Boise City and Pocatello seem to have the sort of the greatest bias towards single family starts, or at least permits, in their areas, with Coeur d'Alene, Idaho Falls, and Lewiston being perhaps a bit less. We also see that with the exception there of Lewiston and Idaho Falls, most, and perhaps even Boise there for as well, the highest density structures were the most permitted compared to the single family structures. But jumping forward to that next decade, we see things are beginning to change a bit. With the exception of Pocatello, who seem to sort of move in the opposite direction compared to the others, we see that fewer permits, at least as a share of all permits, were being issued to single family structures, indicated by the sort of the shortening of those blue parts of each graph. And we have a widening share going to the highest density housing structures. So that'd be the yellow portions growing from the left to the right. Pocatello, bit of an outlier there, wasn't around at the time to sort of say what was going on, but perhaps it reflected just some idiosyncratic trends going on in Pocatello, which meant that practically nil 5 or more unit structures were permitted in that period, and surprising, a lot of triple and fourplexes were being permitted. So again, some interesting variation we're seeing. And again, we might have to ask ourselves what locally might account for that. Now, jumping into what I might call the COVID years, starting in 2020, we see that things have continued to change further still. Now, if I go out to the previous graph, we had the bar graphs beginning at 60% to, again, count for just how tall those blue graphs were. In this graph, we're starting at 50%. So that indicates that there's perhaps even further declining shares in single-family homes being permitted in the state, as well as across the MSAs. So again, we're seeing that sort of that continued trend. And now Pocatello seems to have really changed course the last few years compared to the last decade, with having now the smallest share of the MSAs of permits issued to single-family homes, and now a very large share going to the highest density developments, with Coeur d'Alene sort of also following a similar trend, while Boise City, Idaho Falls, Lewiston, and Twin Falls seem to be moving in not as stark a direction. In fact, Idaho Falls seemed to have seen an increase in its share of permits issued to single-family homes over the last 3 years. So again, some interesting developments, perhaps a bit of sort of diverging trends between some areas like Boise, Coeur d'Alene, Pocatello, and perhaps different set of trends we're seeing for Idaho Falls, Lewiston, and Twin Falls. So again, ask yourself, and we'll perhaps try to answer that question a little bit, of what might be accounting for these diverging trends between our metro areas in the state. Now on to valuations. So we're just looking at issues permitted by sort of the class of structure. Now we're looking at the valuation per unit of, in this case, just 2 broad classes. I just broke it down between single units and multi-units. Now, I sort of went into this, and I'm sure many other people did too, though maybe not everyone, that typically I think of single-family homes as being more expensive, and at the time of construction probably have a higher valuation placed on them by the developer than single units within a multi-unit structure. And this sort of confirms that intuition in a graph. And importantly, again, want to note that valuations in this case do not include the value of land. So this is just on the structure itself. But we can see is that the value of single unit permits issued in Idaho had been about twice as much as the value of multi-unit units in the state over much of that period. There were some divergences at the peak of the housing bubble. That gap shrunk considerably, but for the most part, we see that it's been about twice as valuable, at least as assessed by the developer. And so if valuations tend to be correlated with prices, then we would expect then the price of a single family home to be more than the price of, say, a condominium unit in a multi-unit type of development. Oh, we have a question. I'll just take them as we go. Is that okay?
Yeah, go ahead.
Okay, we have a question here. Yes, there will be a copy of this slideshow offered, and we'll give you the details on that at the end. So, okay. Let's see, valuation per unit. So presents the same information as the previous slide, although we're looking at just a single year, so just a snapshot in time, and broke it down now by our 6 MSAs in the state. And what we see is, again, some seem to be following similar trends. I'm looking specifically at Boise and Coeur d'Alene in terms of the valuation of the permits issued for both single family and multifamily structures. They seem to be comparable to one another. Idaho Falls, Pocatello, and Twin Falls seem to also be sort of clustered in sort of a similar type of valuation of permits as well. But then Lewiston, they're quite a bit of an outlier. I don't live in that area. Perhaps those who live in the Lewiston area could explain kind of what's going on. Perhaps it might be that there's ample supply of of older or perhaps less expensive housing in the area, and most of the demand right now is for the biggest and best, so to speak, or like the what we jokingly might have called the McMansions back in the early mid-aughts. And so perhaps developers are just catering to one side of the market there, that being the perhaps those with the deepest pockets to get the most of everything, so to speak. But there seems to be, again, some diverging trends amongst the MSAs, but that there still is a general pattern, though, which I like to, again, to highlight one more time, is that the height of those blue bars are considerably higher than the height of those orange bars, which is to say that the valuation per unit for a single family home is considerably higher than the valuation per unit for housing units within a multi-unit structure, again, like a duplex, a tripleplex, a fourplex, or any type of like condominium complex or apartment complex. And that premium, which you might think of between the two types of building classes, might range from perhaps 100% or more of, sorry, the premium for the single family permits might be about 100% more than that of a multifamily permit in that same locality. And this is what this graph here kind of plots, which is showing that ratio between the valuation for a single family unit versus a multifamily unit by state and MSA. And it plots that against now the share of permits issued in every MSA as well as the state over at least the 3-year period. And that orange dot in the middle, that shows the Idaho average. And then each dot point in the graph corresponds to each of the MSAs. I kind of want to begin with the right side of that scatter plot now, with that lonely point all the way in the far right, lower bottom there. That's Pocatello. We had the smallest share of permits issued to single family structures over that 3-year period. And we also had what seemed to be the largest premium of single family homes being permitted over the average amongst all multifamily units being permitted in that same period as well. Next point, moving over from the right to left now, that'd be Coeur d'Alene. And we start to see sort of this gradual now increase, sort of, again, a negative relationship between these two. And while 7 data points isn't quite enough to make robust conclusions from, it does at least paint a story which I find to be a very interesting one. And the best way I can frame this story is like this. Some of these areas, I'm looking specifically at Pocatello and Coeur d'Alene, developers are perhaps bifurcating between those who are building single family homes with the most amenities and the most of everything, space, ideal location, you name it. And on the other side, other developers are catering towards those who perhaps want the most economical or the most affordable housing at the same time. And it's sort of cleaving out a lot of that middle ground, which may have been occupied in generations past by so-called starter homes, perhaps relatively affordable, less amenities and less other things added, but still a single family home for a lot of households looking for their first home to purchase. That part of the market might be disappearing in those MSAs, or at least comparatively disappearing. While in other MSAs, and if you jump to the top left-hand corner of that graph, that's Idaho Falls sitting way up there. That might be much less the case, or perhaps not the case at all. There might be perhaps still be a very robust market for so-called starter homes being built because of the different constraints developers are facing. It's still affordable to build that. At least you can still expect to make a return on that investment. And otherwise, this general negative relationship might mean that there's sort of a continuum of communities across that sort of line in Idaho that, depending upon their specific circumstances, they might be more sort of, again, split or bifurcated between sort of one end of the market is for families who can afford the biggest and best homes up on the hill, so to speak, and then a lot of other folks who just want something that's affordable, if perhaps having to lose some of that space or privacy of a condominium or a apartment complex. So that's sort of an interesting story. can't quite confirm that that's what's actually the case, but it seems to be at least one intuitive reading of this graph. And perhaps if we had more data for more communities, we can sort of check that. But again, the paper I wrote just looked at the MSAs because they seem to be the most robust measurements that the survey seems to get back due to just their population size. Many of these smaller communities, the response rates for the survey might be low enough that it makes the data very noisy and very hard to draw any conclusions. So now onto the thoughts of what might be explaining some of this. So in the urban economics literature, there's a lot that looks at sort of this question from two sides, and one of which likes to look at sort of certain constraints that just are set in stone, so to speak. And amongst those, we look at topography and geography. These are things that, yes, you can along some margins change. I'm thinking specifically of like the Dutch or perhaps the city of New Orleans, who have literally built themselves by reclaiming land from the sea. That's a very slow and expensive and arduous task to do. So typically we think of like water boundaries as set in stone. Likewise with very sloped terrain or very stark elevation changes. Yeah, you can build this a home on a very sloped hill, but it's going to be costly to do so. And that's going to sort of take more perhaps developable land off the table. So for the two MSAs, I'm thinking of Coeur d'Alene and Pocatello. We have a bit of all three of these sort of working against us, which might make the sort of single family home a much harder pill to swallow for both households, but also for developers, given the sort of the costs they face. And so we have highly sloped terrain, we have bodies of water, and we have certain political boundaries. In Coeur d'Alene, you're abutted to the west by the Washington state line. Here in Pocatello, MSA, we do have the Fort Hall Reservation, which it provides another layer of certain, at least political constraints, which make building on one side or the other of that line perhaps a very different set of circumstances than you would think just looking at an aerial view. So one thing to consider. So jumping on to the next one, we have local regulations. Now, this is something that was beyond the scope of this paper because you pretty much would have to do a detailed case study, municipality by municipality, of what specifically is on the books, what codes, what zoning rules, etc. So it's kind of hard to talk about this in any specific detail, but again, there are some papers which sort of take a national view and try to sort of parse out some sort of common trends nationally. And Joseph Giorco at the Wharton School at the University of Pennsylvania and many of his colleagues have constructed now two of these, what they call the Wharton Land Use Regulatory Index. The first one came out in 2008 and the second one came out in 2019. And it's basically a survey of kind of like the permit survey of all municipalities and all government units in the country, and ask them a set of questions about the specifics of their different land use regulations and housing regulations in their area. And they use that to construct a single index of, again, what they call the land use regulatory index. And what they found is that at least amongst those Idaho communities that responded, and there were only 13, so hard to really make a strong generalization from that. But what we did see amongst those 13 is that they had above average values for political and court involvement compared to the nation overall, higher than average value for open space requirements. This would clearly seem to tilt the developments more towards single family homes, as well as required exactions, which are any types of costs the developer must incur when building a development, like the cost of laying roadways, water and sewage lines, other public utilities, and so on. So some of these might have an ambiguous effect, but at least one of them, open space requirements, I'm looking at that exactly, would seem to tilt at least the supply side more towards building single family homes versus multifamily structures. And last but not least, one important point that's been raised over the decades, but was very hard to sort of at least try to prove, is this idea that tight housing market constraints can set the stage for sort of battles among special interests within every community. And specifically, supply constraints can create a regulatory incentive to protect incumbent households. households who got in early and perhaps have seen their houses appreciate very strongly due to, again, rising housing prices and supply failing to meet demand, are going to want to hold on to that because one's house is typically a very large part of one's portfolio, and it's a form of non-diversifiable risk. Or likewise, if you were forced to have to buy at an inflated price, you're going to try everything you can to keep that price from falling because now you're underwater on your home. So the evidence for this is hard to parse out, but at least Albert Saiz at MIT had provided at the time, some of the strongest evidence, which is that areas that are already land constrained in some way, again, geography and topography, tend to be correlated with market regulations on housing construction and land use in their areas. So we tend to think of things like topography and geography as fixed, like there's no way you can change that anyway. So if there's a correlation, if there's a causation within that correlation, it likely goes from land use constraints to the regulatory environment. And so that was one piece of compelling evidence, and there's been follow-up papers which have tried to parse it out in perhaps more detailed case studies, but that's perhaps the best national evidence we have of that phenomena. So again, we think of the housing market, there's always risks and trade-offs, but in this case, in the case of a already tight housing market, this might create pressures to keep it tight going forward. And so again, I want to ask everyone to sort of think of what's the opportunity cost of one set of actions versus another. Yes, we might prefer, we want to keep our housing prices high, but if it comes at the expense of perhaps many employers are hard pressed to get workers to move to their area, or many existing households are getting pressed out of their market, that's going to be something that's going to have to get weighed as well in that decision making. So those are the papers that I cited in case folks were interested in sort of delving into the literature. But otherwise, if you have any further questions, I am happy to open the floor now.
All right, thank you, Matt. That was a good presentation. I appreciate that. We have one comment from Chris Blanchard, which regarding your Lewiston differential there, and the suggestion was maybe it's just a very short supply in Lewiston, creating that difference.
Perhaps. I'm not the most familiar with Lewiston. Anyone who's from that area, I'd love to hear your thoughts of kind of what you've been seeing and kind of what's your best guess or hypothesis of what's going on. I know every area is a bit different, so it could be that. It could be my thought that it's perhaps against something of that bifurcating market between developers catering to just the biggest, the best, the most expensive, and leaving everyone else for perhaps the existing stock of housing. But yeah, I'll have to investigate that further. So
sounds good. And another question just came in. And by the way, if you have any questions, again, that Q&A button at the bottom is the best place to put those. And the question is, do you think baby boomers aging out of houses over the next decade will significantly increase supply of homes?
It's going to have a definite effect on supply. I don't know if it's going to be significant or not. Many folks of that older generation, the baby boomers I'm looking at specifically, are going to be moving on to whatever next stage comes after this life. And their homes are going to enter the market at some point. Now, whether or not it's going to be an immediate relief on this housing shortage that we've been seeing in some areas is unclear, depending upon what they plan on doing with that property. If it's sold directly on the market or even inherited to their children, but they plan on living in it, then yeah, that's going to have some relief. If it's instead decided to be turned into perhaps short-term rentals, or perhaps due to the age of the structure, just torn down entirely and rebuilt upon, not necessarily. So I expect it to have some effect on relieving the shortage situation, but it's again, the devil's going to be in the details of how households decide to bequeath these homes or to relinquish these homes over the next couple decades. So.
Okay. Then question is, your analysis is focused mostly on current century, like post 2000. So you have those two kind of atypical kind of eras in the housing market, the housing bubble and collapse, and then I guess the kind of, I guess, the worker shortage type of issue, or housing scarcity. So what could you say about that? Is there anything else that you would say that any history besides that this relates to?
Yeah, so and I didn't include this in the study because it's a very noisy graph, but I threw it in here to look at as well, which is just the share of one-unit structures permitted in Idaho from when the survey first began in 1988. And what we see is that there seems to be some well, very erratic behavior due to just, again, noise in the survey perhaps. But otherwise, from 88 through at least 2000, for most of that time, it was between 85 or 90% or more of permits issued in the state were for single family homes, with perhaps a dip in the mid 90s, which might be related to the sort of brief recession we had at the beginning of that decade. And it seems to be sort of a pattern that whenever a recession hits, that share going to single family homes seems to dip. But otherwise, there also seems to be that notable trend, which I showed earlier, which is sort of that falling share over time. And then especially this last couple of years, it's been a very notable decline in that share. So can't say much before 1988, but I would say that that first part of that decade here was not too dissimilar to perhaps the prior decades before that. But starting in 2010, we start to see a changing picture that's slow, but then accelerating as we get closer to the present. So.
All right. And then we have a comment. I think large multifamily has also become an institutional asset class. I don't know if you want to make a comment to that, or just move on to another question. What would you like to do? Oh,
well, it has, depending upon exactly who's buying it. If it's a condominium, then obviously it's both an asset for you as well as a durable consumption good, which is how we typically think of housing, as a consumption good, not as an investment. But if you're perhaps more in the property management side of things, then yeah, it has grown as a very lucrative form of pretty steady income from renting, and that's become a bit of a contentious issue. I know in some parts of the country, depending upon whether or not these landlords are local landlords or if it's perhaps a company halfway across the world even. So can't say much on that about in Idaho specifically, but yeah, it is perhaps a changing market environment we're in, where even high density housing developments are taking on something of an investment class as well.
Okay. And then obviously the interest rates increases in the last year or two are kind of are changing this market a little bit in terms of construction and home prices, purchase prices. What do you expect? How do you expect the housing market will behave in the next couple of years?
The next couple of years is going to be probably continued sort of muted demand and muted supply, with interest rates having to remain high while inflation is still running well above the Fed's target. My first, I guess, wager I'd have going forward is that we're going to see some slowdown in perhaps movement of households. A lot of households who had perhaps bought homes locked in at lower rates are going to be very hesitant to give that up. And with perhaps prices still high, not only you're facing high housing prices, but now high interest costs on top of that, it's going to perhaps slow down the number of households switching housing units within an area, or perhaps even relocating from area to area. So that's going to keep a lot of supply still sort of locked up and not on the market necessarily. And likewise with construction, even if someone just wanted to build their own single home by themselves, you're going to have to finance probably some of that. And with that, again, high interest rates are going to dampen the supply going forward. So for the next, at least 2023, I'm pretty confident interest rates, we're not going to see any substantial relief on, and probably going to continue into 2024 as well. But when we get through this inflationary period, if the sort of the past trends, at least I'm thinking of before the pandemic continued, we're likely going to see sort of a continued ramp up in construction, to meet the growing demand, but also, again, perhaps more pivoting towards higher density, perhaps more affordable housing on the one hand, and perhaps a declining share of single family homes on the other. So that's sort of been, again, my best wager that that's perhaps more of a secular trend and not just sort of a more short-term trend.
Thank you, Matt. And I think probably the final question I have for you before we close our session here is maybe why is this so salient to the workforce issues, the labor market, and the current tight labor force conditions?
Why is this so salient? Well, I'd say that first and foremost, given that most of our population growth has been through in-migrations, that would mean very much so as well that most of our labor force growth has been through in-migration and not natural population growth. And as such, because people are having to perhaps come into a market with not a lot of prior knowledge of the housing situation, it makes, again, very much like a sticker shock. I personally felt that when I moved here from Indiana a little bit over a year ago. And I think that's probably one major part of it, is that already migration is sort of a main driver of a lot of the growth we're seeing. And because people always need housing, that those two markets are very much intertwined, and it's really hard to talk about one without talking about the other. So.
Thank you, Matt. And then you have a project going on with the Department of Labor. Just launched a survey, an employer survey. Do you want to take a second just to talk, give a plug on that?
Yeah, I'll do a quick plug. So we are conducting a survey of Idaho businesses. This is not specific to employers, but all businesses. So even sole proprietorships and owner-operated establishments as well. We are asking a number of questions that relate to the backgrounds of business leaders, current concerns or other interests that businesses might have in at least the present, as well as some questions about remote work and how jobs are being posted, that we are really trying to get, again, a nice snapshot in time of kind of what's the state of Idaho business. And we are encouraging everyone to participate. If some questions don't pertain to your business, you are free to skip over them, but any participation would be highly valued. So.
Yep. And when did that survey go out?
It went out yesterday. It was sent out through Qualtrics. So if some of you have received an email from a sort of a no reply email with Qualtrics in the name, with a letter addressed from the Idaho Department of Labor, that did come from us. That wasn't a phishing scam or anything like that. So if you have any further questions, you can either reach out to the local labor market economist in your region or contact Craig or myself, and we'd be happy to answer any questions you have or to help address any technical issues you have with completing the survey. So.
All right. Well, thank you, Matt. This has been a great webinar. If anyone has questions for Matt, you're always welcome to contact him directly, or anyone at the Department of Labor, or one of the labor economists, and we can put you in touch. So this kind of brings us to a close. Our next webinar is already scheduled for April 11th. Our Idaho Falls economist Ryan Whitesides will be talking about the future of mining rare earth and critical minerals for Idaho. We'd like to remind you that the Idaho Department of Labor has many services that are geared towards job seekers and employers, but it also includes free access to labor market information that's available at lmi.idaho.gov. And there you can find a variety of dashboards, as well as a page dedicated to the regional labor economists. And there's a directory that can take you to one of our 6 located throughout the state. So thanks again. I look forward to the next time. And then happy St. Patrick's Day, happy Pi Day. Beware the Ides of March. So March the next time. So thank you.
Thanks, everyone.